Hello viewers, so welcome to my channel. I'm Hasham. So already 12 problems I've completed on consignment account. Now I'm going to start the next 13th problem. From here onwards, problems are little bit difficult. So until and unless you watch the earlier problems, you cannot be able to understand this type of problems. So I suggest you, if you have not watched earlier problems, I suggest you to go to the playlist of my channel. Select the subject Financial Accounting 2. Select the videos of consignment accounts, watch the initial videos, you will get the idea about what are the journal entries to be passed in the books of consignor, in the books of consignee, what accounts we have to make. All these things you must have the knowledge, then only you can follow these problems. Now I am going to start 13th problem. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready, and I'm starting the next 13th problem. B of Bombay sent 1000 radios costing rupees 240 each to S of Secunderabad at an invoice price of 300 per radio. B is the consignor, S is the consignee. Number of radios sent 1000. The cost is 240, but it is invoiced at 300 rupees. Invoice price 300. So we can find out, see here, careful, working out. Invoice price per radio 300. Cost price per radio 240. So loading per radio is 300 minus 240 is 60. How many radios are sent? 1000 radios. So total loading. Per radio loading is 60. So 1000 radios, 60,000 is the total loading. Now we need loading in unsold stock. So actually unsold stock is given in the last line. 900 radios are sold. Out of 1000, 900 radios are sold by the consignee. So 100 radios are remaining unsold. So what is the loading on 100 radios? So 100 into 60, 6,000. So remember this. The total invoice price is 300 into 100. 300 into 1000. Total invoice price is 1000 radios. Each radio invoice price 300. So 1000 into 300, 3 lakh. The goods sent on consignment at invoice price is 3 lakh rupees. The radios are to be sold on behalf of B. S is to receive commission at 10% on the invoice price and 25% of any surplus price realized over and above the invoice price. So in working note, we have to calculate the commission payable to the consignee. It is given 10% on invoice price and 25% of any price realized over and above the invoice price. That I'll show it in working note. B spent 1200 rupees towards forwarding and insurance charges. Consignor. B is the consignor. So consignor spent the expenses 1200. S received the consignment and paid 2940 towards freight and 1960 towards other selling expenses. So S is the consignee. So after receiving the goods, consignee has spent the expenditure 2940 on freight. It is a direct expenditure. Direct expense, freight. Whereas 1960 are selling expenses, indirect expenses. S sold 900 radios at rupees 330 per radio and sent a bank draft for the amount due to B. So consignee S has sold 900 radios at rupees 330 per radio. And the balance amount, S has sent the balance amount to B, consignor. You are required to pass necessary journal entries and show the consignment account and S account in the books of B. So we are required to pass the journal entries and make the ledger accounts in the books of B. Who is B? Consignor. So now I am going to start the problem. Books of B, consignor, journal entries. I have drawn the format of the journal, date, particulars, LF, debit, credit. First entry, as usual, goods. When goods are sent on consignment, consignment account data to goods sent on consignment. See the first entry here. Consignment account data to goods sent on consignment. How many radios are sent? 1000 radios. What is the invoice price of each radio? 300. So 1000 into 300, 3 lakh. Being the goods sent on consignment at invoice price. being the goods sent on consignment at invoice price. Secondly, expenses. Expenses are paid by the consignor. Consignor is B. So B has paid 1,200. 1,200 B has paid towards forwarding and insurance. So entry will be consignment account data to bank. Here you see consignment account data to bank 1,200 being the expenses paid by consignor. That's it. Next is expenses paid by consignee. S received the consignment and paid 2,940 towards freight and 1,960 towards selling expenses. So these are the total expenses paid by S. So entry will be consignment account data to S account. See here, consignment account data to S account 4,900. How you got 4,900? 2,940 is the freight and cartage and 1,960 is the selling expenses. The total expenses are 4,900. Being the expenses paid by consignee. That's it. Next one is sale proceed. S sold 900 radios. So out of 1000 radios, 900 radios are sold. So 100 radios are remaining unsold, unsold stock. So first of all, 900 radios are sold at rupees 330 each. The entry will be S account debtor to consignment. Consignee account debtor to consignment. Who is consignee? S. So entry will be S account debtor to consignment. 900 radios into 330 each. So it comes to 2,97,000. Being the radios sold by consignee. Being the radios sold by consignee. Now commission. For calculating commission, come to the working note here. See here, commission. Commission is 10% on IP, invoice price, and 25% on any surplus price realized over invoice price. So first of all, you have to find out how much is the surplus price realized over invoice price. So invoice price of radios sold. How many radios are sold? 900. What is the invoice price? 300. So 900 into 300, 2,70,000. So 2,70,000 is the invoice price of radios sold. That's it. Now actual sale price. Actually 900 radios are sold at 330 rupees given in the problem. So if you multiply, it comes to 2,97,000. Less invoice price of radios sold. How much is the invoice price? 2,70,000. So deduct 2,70,000, 27,000 rupees is the excess price realized. Excess price realized over invoice price. Over invoice price. Now 10% of invoice price. Commission is 10% of invoice price. So 10% of 2,70,000, 27,000. And 25% of surplus. How much is the surplus? 27,000. So 25% of 27,000, 6,750. Add up. 27,000 plus 6,750, 33,750 is the total commission due to consignee. This is the commission payable to consignee, 33,750. So entry will be S consignment account debtor to S account. Consignment account debtor to S account. See here. Consignment account debtor to S account 33,750. Just now I told you how we got it. 33. Being the commission due to consignee. Being the commission due to consignee. Now consignment stock account debtor to consignment for unsold stock. We have to find out the value of unsold stock. It is not given in the problem. Now I am coming to working note. Value of unsold stock. How many radios are remaining unsold? 100. 1,000 radios are sent. 900 radios are sold. So 100 radios are remaining unsold. The value of unsold stock, invoice price of 100 radios unsold. 100 into 330,000. Now we add proportionate direct expenses incurred by consignor as well as consignee. Consignor expenses always direct. How much is the consignor expenses? 1,200. So consignor expenses 1,200. Consignee. Now consignee has spent 2,940 on freight and cartage and 1,960 selling expenses. Remember, selling expense should not be considered in unsold stock. Only direct expenses incurred by consignee that should be considered. So what are the direct expenses? 2,940 freight and cartage incurred by consignee. So consignee 2,940. Total direct expense 4,140. This 4,140 is the total direct expenses on 1,000 radios. On total number of radios, 1,000. For 1,000 radios, 4140. How many radios are remaining unsold? 100. For 100 radios, how much? So 100 divided by 1000 into 4140, 414. Now you add up 30,000 plus 414. 30,414 is the value of unsold stock. The entry will be consignment stock account data to consignment. Here you can see consignment stock account data to consignment, 30,414. From here we got it. Being the value of unsold stock. Being the value of unsold stock. Next entry will be loading. Now we have total loading and loading in unsold stock. Already we have calculated here. What is the total loading? Total loading is equal to 60,000. We have calculated. Each radio loading is 60 rupees, 1000 radios. So entry for total loading is goods sent on consignment account data to consignment. Goods sent on consignment account data to consignment. You can see here. Goods sent on consignment account data to consignment account 60,000. Being the loading in total goods sent. Being the loading in total goods sent. Now we'll calculate the loading in unsold stock. How many radios are unsold? 100. Here loading in unsold stock, 100 radios into 60 rupees, 6,000. So 6,000 rupees is the loading in unsold stock. The entry is consignment account data to consignment stock reserve. Consignment account data to consignment stock reserve. 6,000 being the loading in unsold stock. These two are the additional entries and it will be passed only when goods are sent at invoice price. If goods are not sent at invoice price, if goods are sent at cost price only, then these two entries will not come. These two entries will not come. Remember, every problem same entries. I am not changing the entries. Entries are remaining same. Only amounts are different. That's it. Now next is goods sent on consignment account data to trading account. The balance remaining in goods sent on consignment will be transferred to trading account. 2,40,000. Next comes bank account data to S account. That means the remaining balance is sent by S consignee to the consignor. Only after preparing consignee's account, S account. By preparing S account, we can be able to know how much is the amount finally sent by consignee to consignor. That will come to 2,58,350. The bank account data to S account, 2,58,350, being the final amount received from consignee. And last one, consignment account data to profit and loss account. Profit. These two entries you should not pass right now. Up to 9th entry you should pass. After 9th, 10th and 11th you leave the space blank. Then you start making the ledger accounts. By preparing these ledger accounts, we can be able to know how much is the profit and how much is the amount received from consignee. After finding out this, you can pass this 10th and 11th entry. Right? Now I am coming to ledger accounts. First ledger account is consignment account. Consignment account, first ledger account. And second account is S account. S is the consignee's account. Here goods sent on consignment account, consignment stock account. 4 accounts we need. Now we start posting the entries into ledger account. The first entry, consignment account data to goods sent on consignment. So consignment account debit side, you can see here, consignment account debit side to goods sent on consignment. To goods sent on consignment 3 lakh. And goods sent on consignment is credited by consignment 3 lakh. First entry posted. Now second entry, consignment to bank expenses. So consignment account debit side to bank expenses 1200. Next entry, consignment account data to S account 4900. Consignment account data debit side to S account 4900. And S account should be credited by consignment expenses 4,900. This entry posted 4,900. Now S account data to consignment sale proceed S account should be debited, consignment should be credited. So S account debit side to consignment sales, and consignment account created by S account sales, 2,97,000 posted. Next comes consignment to S, 33,750. Consignment account debit side to S account, 33,750. S account credited by consignment commission, 33,750. So commission entry posted. Next, consignment stock account data to consignment. So consignment stock should be debited. This is the consignment stock. It is debited to consignment, 30,400. And consignment account should be credited here by consignment stock account, 30,440. So consignment account is credited and consignment stock account is debited. Next, after that, goods sent on consignment to consignment, loading. Goods sent on consignment account data to consignment, 60,000. And consignment account is created by goods sent on consignment, loading, 60,000. So goods sent on consignment is debited and consignment is credited, 60,000 over. Next, consignment account data to consignment stock reserve. So consignment account is debited to consignment stock reserve, 6,000. 6,000 over. Next, goods sent on consignment account data to trading account. So goods sent on consignment debit side to trading account, 2,40,000. Then after 2,40,000, bank account data to S Limited. Here already after completing S account, we come to know. Then profit or loss. Here all entries I have posted in the account. Now I will find out the balance. Credit side, all the three items are ticked. Take the total, 387,414. From 387,414, deduct 1, 2, 3, 4, 5. All the 5 amounts are ticked here. Deduct all the 5 amounts, you are getting balancing figure 41,564. This 41,564 is the profit because credit side is more. The entry will be consignment account data to profit and loss account. So here consignment account data to profit and loss account, 41,564. Being the profit on consignment. That's it. Now last entry, S account. In S account debit side we have 2,97,000. From 2,97,000 deduct 4,900, deduct 33,750. Balancing figure is 2,58,350. 2,58,350. This is the final amount received from S. Final amount received from S. Bank account data to S account. Here, bank account data to S account, 2,58,350. Being the final amount received from consignee, we have taken. So consignee's account is closed. Here, both sides equal, 60,000 plus 2,40,000, 3 lakh. 3 lakh both sides equal, closed. Consignment stock account 30,414, debit side. Simply take the balancing figure, by balance carried down, to balance brought down, 30,400. That's it. This is the end of problem number 13. Totally 13 problems I've completed. Come on, now we'll start the next problem. Problem number 14. See the 14th problem carefully. Mallikarjuna sends goods on consignment to Ravindra. So Mallikarjuna is the consignor, Ravindra is the consignee. The terms are that Ravindra will receive 10% commission on invoice price, which is cost plus 25%, and 10% of any price realized above the invoice price. The terms of commission are given. That means Mallikarjuna will give commission to Ravindra at the rate of 10% on invoice price. And apart from that, 10% of any price realized over and above invoice price. So in working note, we have to calculate the commission. Then Ravindra will meet his expenses himself. One new point is there in this problem, that first time consignee has to pay expenses himself. Normally consignee will pay the expenses, later on it will be charged to the consignor. Ultimately all expenses should be borne by consignor. But here this is the first problem where expenses of consignee should bear by himself. It will not come in the accounts of consignor. So here Mallikarjuna sent goods whose cost was rupees 20,000. One point is there. Here goods are sent at invoice price, which is cost plus 25%. So we have to find out the invoice price. The cost price is 20,000. To this 20,000 we have to add 25% loading to get the invoice price, and spent 200 rupees on freight and insurance. So 2,000 rupees are spent by the consignor Mallikarjuna. Then Ravindra accepted a bill for rupees 15,000 immediately on receiving the consignment. So advance. An advance has been received by Mallikarjuna in the form of a bills receivable. So his expenses were 400 as rent and 200 insurance of go down. So this 400 rupees and 200 rupees are spent by consignee, that is Ravindra, and he himself has to bear the expenses. These expenses will not be borne by consignor according to the agreement. Now Ravindra sold 3/4 of the goods for rupees 25,000. That means 3/4 of the goods are sold. So remaining 1/4 goods are in the stock, unsold stock. Now part of the sales were on credit and one customer failed to pay 500 rupees due from him. The goods are sold on cash as well as on credit. So consignee has sold the goods on credit to a customer and there was a bad debts of rupees 500. A customer is unable to pay the amount. So this 500 rupees is the bad debt. Now question will arise, who should bear this bad debt loss? Consignee or consignor? In this problem, no del credar commission is given. No del credar commission is given. So the bad debt loss should be borne by the consignor. Now, prepare the necessary ledger accounts in the books of Mallikarjuna and Ravindra. So ultimately it is asking you to open the ledger accounts in the books of consignor and consignee. So first of all, I'll give some working notes before starting the ledger accounts. The first working note. Bad debts of rupees 500 arising out of credit sale are to be borne by Mallikarjuna, consignor. First time we are coming across where bad debts will be borne by consignor himself. The bad debts will not be borne by consignee because no del credar commission is paid. Del credar, as the consignee is not receiving del credar commission, so rupees 500 should be debited to consignment account. So first time we are charging the bad debts to consignment account. First new point. Second, Ravindra's expenses. Ravindra, who is Ravindra? Consignee. Consignee's expenses should not be debited to consignment account as the expenses are met by Ravindra himself. According to the agreement, the expenses of consignment paid by consignee should bear by himself. It will not be borne by the consignor. That means expenses of Ravindra will not be debited to consignment account. First time we are coming across this point. Now cost price of the goods sent 20,000. Invoice price it is given cost plus 25%. So cost is 20,000 plus 25% is 5,000. So total invoice price will be 25,000. So how much is the loading? Invoice price minus cost price. 25,000 minus 20,000. 5,000 rupees is the total loading. Now loading in unsold stock. How much goods are unsold? 1/4. So 1/4 of 5,000. 1,250 is the loading in unsold stock. Because whenever goods are sent at invoice price, two adjustment entries are there. First, to remove the total loading, and secondly, to remove the loading in unsold stock. Already in last 3-4 problems, we are continuously doing this invoice price. Now, value of unsold stock. Invoice price of 1/4 of the goods. Total invoice price is 25,000. So 1/4 of 25,000, 6,250 is the invoice price of 1/4 of the goods. Now proportionate direct expenses. Here expenditure paid, expenses paid by consignor only we will take. So consignor pays 2,000 rupees. So 1/4 of 2,500. So add up 6,750 is the value of unsold stock. Stock on consignment. Now commission. It is given in the problem 10% on invoice price plus 10% on any price realized over and above invoice price. So we have to calculate. So first of all, invoice price of 3/4 of the goods sold. All the goods are not sold. 3/4 of the goods are sold. So what is the invoice price of 3/4 goods? What is the total invoice price? 25,000. Total invoice price is 25,000. We want 3/4. So 3/4 of 25,000, it comes to 18,750. The invoice price of goods sold is 18,750. Now excess price realized over invoice price is the total goods are sold for 25,000 given in the problem. The actual goods are sold for 25,000, whereas invoice price is 18,750. So how much is the excess price realized? 6,250 is the excess price realized over and above invoice price. Now we calculate commission. 10% of invoice price. How much is the invoice price? 18,750. So 10% of 18,750, 1,875 plus 10% of surplus. Surplus is 6,250. 10% is 625. So total is 2,500 commission. So these are the working notes we have calculated before starting the ledger accounts. Now we'll open consignment account. Then consignee. Who is consigning? Ravindra. Ravindra's account. Then goods sent on consignment account and consignment stock account. So 4 accounts we are preparing in the books of the consignor. First entry. When goods are sent on consignment, consignment account data to goods sent on consignment. So consignment account is debited to goods sent on consignment at invoice price. Invoice price is 25,000. So consignment account is debited. Goods sent on consignment account is credited. Consignment account data to goods sent on consignment. Now, second entry is expenses. 2,000 rupees are the expenses paid by the consignor. So entry will be consignment account data to bank. So consignment account debit side to bank expenses. Now third entry is bill received. Advance. Advance is received from Ravindra, consignee. So bills receivable account data to Ravindra account. So Ravindra account is credited by bills receivable 15,000. Right? Next entry will be sale. Ravindra has sold 3/4 of the goods for rupees 25,000. Entry will be Ravindra account data to consignment. Ravindra account is debited to consignment 25,000 and consignment account is created by Ravindra 25,000. Now expenses incurred by consignee will not come, but bad debts will come. The bad debts will come. So entry will be consignment account data to Ravindra account for bad debts. Because we have to charge to consignment. So consignment account is debited. Now for whose balance should be reduced? This Ravindra's and a consignee's balance should be reduced. So debit side to Ravindra bad debts 500. And Ravindra's account by consignment bad debts 500. Next comes commission. How much commission? Just now we have calculated 2,500. Entry will be consignment account data to Ravindra account. Consignment account debit side to Ravindra commission 2,500. Ravindra account created by consignment commission 2,500. Right? Now consignment stock. What is the value of consignment stock? We have calculated 6,750. Consignment stock account data to consignment. So consignment stock is debited. Here 6,750 to consignment and consignment is credited by consignment stock 6,750. Right? Now, whenever goods are sent at invoice price, 2 adjustment entries should be passed. First, for removing the total loading. Total loading is 5,000. Just now we have seen here. The entry is goods sent on consignment account data to consignment. So, goods sent on consignment should be debited to consignment 5,000 loading. And consignment should be credited by goods sent on consignment loading 5,000. The second entry is removing the loading in unsold stock. Unsold stock loading is 1,250. We have calculated loading in unsold stock 1,250. Entry is consignment stock account data to consignment stock reserve. So consignment account debit side to consignment stock reserve 1,250. That's all. So all the entries are passed. Now we find out the profit or loss. So here credit side, all the 3 items are ticked here. The total is 36,750. From 36,750 deduct all debit items. 5,500 is the profit. Credit side is more. So profit on consignment. Entry will be consignment account data to profit and loss account. So debit side to profit and loss account 5,500 over. Now we'll come to the consignee's account. The consignee has not settled the account. Still balance is due from Ravindra. So how much balance? Debit side 25,000. From 25,000 deduct minus 5,000, minus 2,500, minus 500. So 7,000 rupees by balance carried down, balancing figure. And here to balance brought down 7. Means 7,000 rupees still receivable from Ravindra. Next, goods and non-consignment. Goods and non-consignment credit side 25,000. From 25,000 deduct 5,000, 20,000. This 20,000 should be transferred to trading account. Always, every problem, trading account we have transferred. That's all. Now consignment stock. The consignment stock 6,750 debit side. Credit side by balance carried down. Debit side to balance brought down 6,750. Over. All the ledger accounts in the books of consignor I have completed. All the working notes I have explained in detail, and how I have completed the ledger accounts I have explained. Now I am coming to the books of Ravindra Consginee. Books of Ravindra Consginee. He will make only one account. Whose account? Consignor's account. What is the name of the consignor? Mallikarjuna. So Mallikarjuna's account. So first of all, a bill is accepted. When a bill is accepted by Ravindra, entry will be Mallikarjuna account debtor to bills payable. The acceptor of the bill will write bills payable. The drawer of the bill will write bills receivable. It's a bills receivable for Mallikarjuna. It's a bills payable for Ravindra. So Mallikarjuna account debit side to bills payable 15,000. Now next, he sold the goods for 25,000. The bank account debtor to Mallikarjuna account. He received the amount, so bank account is debited, but this amount belongs to Mallikarjuna. So Mallikarjuna account created by bank, sale 25,000. Next one is bad debts. Bad debts will be borne by Mallikarjuna. So entry will be Mallikarjuna account debtor to bad debts. So to bad debts 500. Now commission. 2,500 commission receivable. So Mallikarjuna account debtor to commission account. So debit side to commission. Over. Finished. We have posted all the entries. Now we find the balance. 25,000 minus 15,000 minus 2,500 minus 500. So 7,000 rupees is still due to the consignor. Ravindra has to pay 7,000 rupees to the consignor Mallikarjuna. That's all. So this is the end of problem number 14. So totally 14 problems I have completed explaining each and every point. So if you think that by watching this video, if you think that your knowledge is increasing, then give a like to this video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, if you have not subscribed, please subscribe my channel. Inshallah, I'll continue the next video on the next